Hello everyone and welcome to my channel. This is one of the first trade reviews that I'm doing. I think I'll do a lot more of these because I have started doing futures a little bit actively, not a whole lot. I'm still big on stock and options long term, but I have created at least $1,000 account and trying to see how I can stay disciplined and grow it slowly. So this is the first trade review that I'm doing. Like you can see, the net PNL on this trade was 152.75, almost 153. The realized R multiple on this trade was 7.64 R. On this $1,000 account that I've started, I want to keep my risk on every trade to start with $30. I am not willing to lose anything more than that because $30 is like 3% of the account, which ideally, if you look at these YouTubers, you'd say that that's still a little bit more than what I would like. Usually, the rule of thumb is that you should risk only 1% of your account. But anyway, I think 3% is reasonable since I'm starting from a small account, and it's not like I only have $1,000 in my life, so I'm okay risking 3%. And then my goal is to, as I hit 2,000, I'm going to add one more contract. So I've been trading MES, mostly MES. I don't want to get into something else just yet until I grow my account. So yeah, starting to review the trade here, 9:30 bell, you see that the price was pretty much dropping throughout the pre-market or whatever you call it throughout the night. And then I was just watching. I don't usually take any trades in this first 15 to 30 minutes because I'll tell you why. The volume is just so high that if I try to put in, let's say I saw a huge buy here, right? And I take my reversal towards the VWAP. By the way, the yellow line is VWAP and the blue line is 9 EMA. So let's say it crossed my 9 EMA and I have, let's say from here to here, I still have what, like 15 points of range. I wish Tradezella had more of a, dollar number uh, instead of showing me the points, because it's really hard to tell what dollar number would this be. But anyway, I mean, maybe there's some setting which I just don't know of, but if I do the same price range thing on what do you call it, the trading view platform, then it shows dollars. But anyway, what I'm trying to say is there's not a whole lot of range here, and plus I would also have to put my stop loss somewhere below this candle, so that will lead to a huge risk. Definitely not $30. So anyway, coming to our trade here, my strategy or playbook that I followed was reversal towards VWAP. This could have been called as a bounce as well. I either trade a bounce or a reversal towards VWAP. Why I said this was reversal, because the price had already crossed the VWAP, like the EMA line had already crossed VWAP. Now what I saw was that, okay, at market open it went up, it rejected the VWAP, came down again. Now my thought process was that even though the price has gone up above VWAP, I should see some weakness here, and I should start seeing a reversal back down, just like it happened here. It's just that it happened here with a lot of volume, while I'm looking for a setup where it matches my risk level that I'm taking on this account. And yeah, that's why. So you'll see that on this account, actually I had only taken $20 risk, because I thought that if the price reverse, like this is where I entered, and if the price maybe crosses this level, I would get out of it, because then I'm not interested. Then that means that the price bounced off from the VWAP and rejected VWAP and it's going to move up. So then I'm not interested in it. But I entered here, took a $20 risk on this. It chopped around just a tad bit, which is expected because it would see some resistance here. But then I saw a nice huge candle cut through the VWAP right there. Another confidence why I leave this volume profile down here is you'll see that as the price started moving up here, you'll see that the volume was really high on this candle, but then the volume just drastically started dropping. So that means that the buyers were really strong here, but then as the price hit a little bit above VWAP, the buyers started getting really weak. So that's something I look for when I look at price. I don't just look at the change of price, I also look at volume. How much trade volume are we getting? That just shows how aggressive or weak the buyer or sellers are. So now what happened is we saw that the buyers are kind of exhausting here, and we saw that the price also started moving down. So it formed multiple, first of all it formed a double top here, and then rejections. It started forming a nice downline here. Now ideally I do not enter unless I see a clear double top form. Like for example, I'll show you a little bit. Let me look for a good example. Yeah, so ideally I wouldn't enter unless something like this has formed, which is like you see a clear exhaustion in buyers and then you see a nice double top, and that's where I would enter. But here this was an exception because I saw that the same thing happened here before, and also I saw that this was a very low risk trade. Since this was a low risk trade, even if the price does bounce off of VWAP and just goes up, I wasn't too worried about it because it was lower than my usual risk. Okay, so that's something I was looking for. And also just how aggressively the price got rejected off of this level right here. As soon as the buyers took control here, the price couldn't cross this level, and the sellers took control right away with almost the same volume and brought the price back down. So this behavior was interesting to me. And the same thing happened here as well. So I was like, okay, this is a good sign. This is a really good sign. Like for example, this, right? Very bullish candle, didn't last at all. It was taken out by the seller volume right here. Again, when I say seller volume, it's not like there were more sellers, right? Because there's equal number of buyer and seller. But what the volume tells us is like how aggressive the event was during that time frame. So yeah, this is where I entered, and my exit rule is that I will not exit unless the price crosses 9 EMA. Initially I used to trade 8 EMA, but right now I because I was losing a lot, and not losing as in it wasn't hitting my stop loss, it's just that I was losing the opportunity to continue the trade, and I was missing out a lot of R multiple when I was exiting early on the 8-hour intersection. So that's what tradezella really helps you do. Like it really helps you tweak your strategy to the best returns you can get. So anyway, I saw that the price aggressively dropped here, and then I started seeing some weakness. So you see that there's huge selling volume here, but then the buyer stepped in. But what I should have seen here is that even though the buyers stepped in, the buyers couldn't really push the price above the EMA. And then again, the sellers stepped in and drove the price back down. I got a little scared here and I exit the trade because I was up $152, which is like 7+ R. So I was like, hey, this is a good trade already, let me just take it off. And again, I'm doing only one contract, right? So it's not like I could scale down 50% of the position and let the other run. We'll get there when we hit $2,000 on the net on the net account value, because with $2,000 now, the 3% of 2,000 would be $60, right? So yeah, then I can do two contracts. So anyway, this was the mistake that I made, is that I exit a little too early, because you would see that the price, ideally I should have exited here according to my rule. As soon as a candle closes above 9 EMA, I exit. But there again, it's like you have to see how the next candle is reacting. Is it kind of showing a very strong selling momentum? But yeah, this is $153, right? So I almost missed. So that's 152. That would be another 152. So that's 300. And then this would be more like 400 or something like that, right? I think I wrote down here $273 left on the table. So this could have easily been a very nice, I don't know, like 10 plus hour trade, 15-20 hour, I guess. I don't know, I can't do the math right now. But what rule could I have followed to maximize my return? Wait for a double bottom, wait for a 9 EMA crossover. Now I say that wait for a 9 EMA crossover, but that means I would have exit here. But then I would have seen the behavior of this candle and stayed in the trade. But again, could have, should have, whatever. Doesn't matter. It was still a 7.6 hour trade, and I rated it a 4-star trade because the 1-star taken off was to not follow this rule. I did trail my stop pretty heavy on this one. As soon as it reached $100, I had it at 3R. And then I just, this candle really just scared me, because what I was assuming would happen is this right here. So then I would have lost a lot of my profit if a candle like this would have shown up right here. That's what I was expecting. So then I would have lost a lot of profit. So I think overall, depending on what information I had and the fact that this trade was already up 7.6 R, 8, close to 8 R, I think it was smart to put it away. If I was trading 2 contracts, I would have gone all the way down with at least 1. So yeah, that's my trade review. Let me know if you guys like this. I will also update you guys on my long-term stock and options portfolio. That you'll be surprised how well that is doing. I know I was uploading my shorts back then, and it was at like 70 to 80k, somewhere around there. I'll leave that as a surprise for you guys. It's amazing how that has grown. But anyway, if you guys like these kind of videos, please make sure you leave a like on the video and also subscribe to the channel. It's a lot of fun to learn together. I'm learning as well. So if you guys think I'm doing something wrong or something that you can teach me, for sure, go ahead and leave a comment down below with your tips and tricks. All right, see you guys on the next one. I need to feed my baby.